Hello everyone, welcome. This is a live analysis. Since tonight is the spotlight of the whole week. Actually, we have two. We have FOMC tonight, but NFP as well. But the FOMC meeting is well anticipated and is expected to shake a bit the sentiment. So, as usual, remember that this is your session. I'm here to reply to any questions that you have. I'm here to help with everything you have. But until I have comments, questions, and etc., I will go through. Hello, Josh, the very first over here. Welcome. So, as soon as I have any news from you guys, I'm gonna go through I'm going to go through the dollar and the ADP number. Let's discuss a bit regarding the mist of expectations right now. 5 minutes ago, few minutes ago, actually. Hello, everyone. Spiral, mixture. Welcome, everyone. Welcome. So allow me to share the calendar and, of course, the dollar, since we have seen a nice drift just earlier, because obviously the mist of the ADP number with a revision lower as well. So what that explains and what that triggers, usually, even though ADP has been largely ignored lately, and the reason for that is the fact that it's no longer strongly correlated with the NFP. Okay, so theoretically, actually, the mist of ADP, of the employment change, just 2 days ahead of the NFP, something that theoretically is adding downwards pressure and downwards risk on the labor market and the upcoming NFP number. However, despite the revision of the formula, the revision of the formula for the ADP number that the Fed has recently, I think, few months ago, they have recently changed the formula and the mathematical formula I'm referring to of the ADP number. However, it's still a data that it doesn't really anymore, at least, is not a good indicator for NFP. Regardless of that, we have seen that, considering the ADP number just 10 minutes ago and ahead of tonight's meeting, we have a dollar under pressure, and actually that was a key and a strong move lower the last few minutes on the announcement of the NFP bit of ADP bit over here. So bit missed, sorry, with the revision lower as well. So retested a bit yesterday's bottom, quickly turned back to the range that they used to be the whole morning. So this looks to be just I was a snap correction or something, but just to remind you guys that this move could be easily faded, and the numbers today they could be easily ignored ahead of the FOMC. Okay, so let me just get this out of the way, and just very briefly, I jump to the daily chart just to show you how flat and steady dollar has been the whole week. Actually, the last 2 weeks. And the reason for that, other than the Fed and the ADP, is also the inflation, is also this uncertainty that there is whether actually U.S. economy has avoided the recession or not. So, however, definitely something that the markets are waiting today, and actually the fact that it's ranging for the whole week is something that proves that all the attention is on the FOMC tonight. So hello everyone. I don't enter NFP because I don't know rules, NFP entry buy or sell. It's a very tricky. Okay, there are some strategies that are actually based on how you could trade the news. However, my dear, make sure have in mind that especially the NFP, because it's the most volatile event of the whole month, it requires a quite reasonable and strong risk and money management prior any position. So you should check first whether you are the type of trader that trades the news, whether this is something that works for you, and maybe you can try and study a bit some strategies that are helpful for trading the news in a demo account as well before trying an NFP strategy. Before trying this in a live account. There are some rules. You are absolutely right regarding an entry during the NFP release, but you're gonna see more on the live analysis on Friday. That will be hosted this time by my colleague Michalis. Okay. So good evening, everyone. Hello. 4 more minutes and it's out. It's already out. So let me bring it back in. Is it a buy or a sell? Oh, okay. Let's find out together. So employment cost missed expectations as well. And actually, that's pretty much it. Chicago is an hour away. Oil inventories is an hour away, more than an hour away. So have in mind, guys, that the ADP jobs and the fact that they slowed, they slowed significantly because based on the forecast and the previous reading, it's something that could add some pressure on the NFP, which is expected at the 185, if I'm not mistaken. Let's see together. 180,000 for December. So, yeah, it is okay. ADP, it could provide some kind of a barometer for the private sector hiring. However, as I already mentioned, especially in 2023 and 2022, if I'm not mistaken, because that's why they were forced to change the way the formula, the mathematical formula for ADP. As I said, is not a very strong indicator for what will happen on Friday. So I'm gonna leave this aside for the time being, okay? And let's see, since I had a question from Mohammed. This is a live analysis. So in order to discuss together the economic data from US, what is expected today, what is expected tomorrow with the Bank of England, just to be prepared for tonight and tomorrow. And of course, we're gonna go through any asset that you want me to cover. This is dollar. I'm gonna stick it. You are absolutely right, and it is not clear what I'm showing right now. So I'm gonna have it as a headline or something. Yeah. So right now, this is USD index. For one hour chart. So save that one and share that one as well. Okay. I think that works quite well, isn't it? Okay. Perfect. So someone asked, is it a buy or a sell? Obviously, I cannot advise, But let's check together the momentum and the sentiment intraday and in the daily chart. So you will figure out, David, what you want to do, or whether you want to stay out of the market or not. So guys, I would really appreciate if there's a particular asset that you want me to cover. It's quite useful for me to let me know particular time frame that you want me to cover as well. Okay, so and gold, obviously. Mohammed is the very next one. Okay, so this is dollar index 1 hour chart, and I have used Heiken Ashi candles. I kind of like them lately. They fit quite nicely intraday for dollar index. So that's just my own setup, guys. So as I was saying, Heiken Ashi 1 hour chart, and let's zoom in just for you to be able to. Okay, so look at this nice candles. It has been to the downside. It has been in some kind of a ups and downs, ranging market the whole week. But since the Asia session, we have seen the pullback away from 103.50 territory, extending on the ADP number down to the 103.10, 103.109 territory. So I'm going to zoom in further and look at this. These are Heiken Ashi candles. So the fact that there is no tail at the top indicates that the bulls are in control, at least in the very, very short term for dollar index. So let me zoom in the 30 minutes chart and look at this. This is a new candle actually. Okay, and look, that it started with no tail, extending lower, right, and already broken the previous bottom. So there is further pressure in the very, very short term on the dollar index, with very key support level obviously at this double bottom, which implies a nice support level for the dollar index in the very, very short term, as I mentioned. Imminent one is the 103.15, which is already breached and broken. So I'm gonna keep the 103.10 as a key support. And let me just, okay. What we have here, there was this rounding top as well earlier. So people that are scalping, or people that they are like trading in such a short time frames, I guess they have already spot that, and that might explain some pending orders being triggered at the break of 103.25 territory, right? So let me get back to the 30 minutes chart and the 1 hour. So intraday, actually in the very, very short time frame, such as the 1 and 30 minutes chart, we can see dollar under pressure with a very important support level for the rest of the day, guys, at 103.10, which is this double bottom that we have seen the last 2 days, right? Very, very key support level, because that could open the doors to the another 10 pips lower, or even to last week's bottom. So let me see what we have over here. That's support levels, multiple support levels, intraday ones, okay? Intraday ones, if sell-off continues ahead of FOMC, or if Mr. Powell tonight managed to extend to add further pressure on the dollar. Intraday, have in mind that this is a very strong support level, which if breaks anytime soon, it might suggest another 20 pips decline down to 102.90 territory, which is the very next support level for the dollar index. In the daily time frame, and let me get rid of these support levels. In the overall, as I mentioned in the beginning of this live, dollar remains steady and quite flat the last 2 weeks. So to have a clarity regarding the outlook, the overall outlook, we need to see the asset exiting either to the downside or to the upside, away from this range that we have seen for the last 2 weeks. Fundamentals, though, just to remind you a bit, remember that fundamentals, and because market already started pricing in the year's interest rate cuts, remember, markets are always ahead of themselves. So especially in regards to the interest rates, they are pricing in the expected change of the policy ahead of time. This is what happened also the last 2 years when the Fed started to increase interest rates. So you understand that a big part of the interest rate cuts has already been priced in. Okay. However, because in general we're just waiting for the interest rate cuts to start in the second half of the year, and that is something that is negatively correlated with the dollar. So overall, the outlook of dollar index remains negative. But because the latest data that we have, inflation, growth out of US, consumer confidence yesterday climbed significantly. All the data that we have seen so far managed to postpone the interest rate cuts from the Fed. So a dovish statement a hawkish statement tonight. Hawkish, I'm not referring to a rate hike, no. It's just any sign tonight that Mr. Powell is thinking to start interest rate cuts later on, like if he postpones tonight the time for the rate cut, and if we see on Friday a pretty solid and tight labor market once again, something that also implies that the Fed needs to wait and needs to wait more before it announce any interest rate cuts. So these two things could support the dollar. Is it clear? Regarding the dollar? The dollar overall for 2024, based on the fact that the Fed suggested that they are done, they are picked for, and they will start cutting interest rates. So based on the Fed's view, it started to decline because a dovish central bank implies pressure on the currency. So overall, fundamentally, in the long term, dollar is under pressure considering the change of policy. But because the data are keeping, they're like they stubbornly suggest that inflation will stay a bit higher. It will not reach to the 2% goal anytime soon. Because we're still having, as I said, growth, tight labor market, etc. So in the near term, in the medium term, the data support the dollar because they push back the time of the very first interest rate cut. Okay, so I think that was, so if there is a rate cut, the dollar will, no. Okay, there won't be a rate cut. Now, the rate cut has already been postponed for April, even May. Okay, so now everything depends on the data, my dear Uncle Moose. The Fed made it clear that they will proceed with their interest rate cut. So an interest rate cut is it tends to move dollar lower, not higher. Okay, so they have already mentioned that. So considering that they will cut interest rates within 2024, the dollar is moving lower. So we have seen on this perspective, on the dovish stance from the Fed, we have seen it falling since October, a bit of a correction in November, then another dip in December. Now, why, however, the whole January is appreciated? Because even the Fed alerts and signals for interest rate cuts, the data that we are getting, the economic data, they are giving the exact opposite signal. Okay, so the data are the ones that support the dollar. So if we have on Friday a strong NFP number, that could push dollar further to the upside. Okay, so this is what boosted in January dollar. But theoretically, interest rate cut adds pressure on the dollar, so dollar lower. So if tonight we hear Mr. Powell giving a sign that yes, we're gonna, if he gives a time, he gives an indication regarding whether it's gonna proceed with interest rate cuts within the very first half of the 2024, or whether it will confirm how many points they have in their plans to proceed with, that could pressure dollar. Okay, just have in mind, at least for tonight, dear uncle, to set some support and resistance levels on your dollar. Okay, just for any intraday breakout. So key resistance, at least for tonight, is the ceiling of the week, which is this one. So let me just, so a break tonight, here we are, a break tonight above 103.50, 103.60 territory could open the doors to the previous high, which was up to 104 level, while a break tonight below the last 2 weeks support, which is this area over here. So it's between 102.80 and 102.85 levels, somewhere here. So a move below that level could open the doors to the mid of 102, or even lower to the 102 level. So have this in mind. That's a nice resistance. So 102.50, 102.40, or even, let me zoom in a bit. Yeah. So let me add my Fibonacci's on, just to give me some clarity. Very, very nice. Have you seen that these levels are near? So that's perfect. Now they are even better. So also coinciding with the 61.8 and 50% Fibonacci level from December's rally. But that's in the medium term, not intraday. So intraday, just keep an eye on the bottom that we saw earlier, while a break below that could open the doors on last Wednesday's bottom. Okay, so decline continues, as you can see. Decline continues. So I think we covered a lot about dollar index and FOMC. Yes, you mentioned gold. I'm really sorry. I was trying to explain at least a bit of the fundamentals. The least amount in UK. Bitter, if I'm not mistaken, is very, very, very low. I mean, okay, there is the send account, which is cents, but there is also the other accounts, if I'm not mistaken, they are $5 or something. But yeah, better to check the website, okay, for confirmation. So gold, yes, guys, yes, of course. It's your favorite asset, as I noticed. So, okay, this is something. Okay, let me change the caption as well. This is something that I presented in the previous live analysis that we had together last Friday. And I kept that on because I want to remind you that we discussed that actually was, it was 2 weeks ago, if I'm not mistaken. And we discussed together that the gold, let me zoom in a bit, gold retested for several days. This is a daily gold chart. Several days, my upwards channel, an upwards channel that I spotted since October. And we did mention back then that if it holds, if it doesn't break, if it doesn't exit the upwards channel, that could indicate that it could continue this upwards trajectory and could eventually turn back higher in the middle of the channel. So where we're standing right now, indeed, gold managed to hold within the up channel, which is something that is a bullish indication. Okay, but it's ranging for 10 days in a row. Quite significant, though, is the fact that the last 2 days is retesting the 2 weeks resistance. And why this is key? This is key because a closure tonight, okay, tonight, a closure of the day, if the gold closes tonight above 2040 level, this could indicate further bullish momentum with the prospect of a return back to the midline, which that leads us to the previous resistance territory and the 2078 or even 2080 territory. Remember these lines that I put on, these triangles that I put on, which I just mentioned, that as soon as we exit this range, we could see an attempt to the mid of the channel, which it tends to consolidate a bit before another attempt to the upside. This is a daily chart. This is a medium-term analysis. So this is just for you to have in mind. And it's good to have these support and resistance levels on because, as I explained, a nice decisive candle tonight, daily candle, closing above 2040 could attract further bulls into the market. Okay, so keep that in mind. You see RSI, stochastic, that's 78. RSI still at 54, but let's wait and see. Now, 1 hour chart. Let's get back to our, let's get back to our intraday setup. Here we are. I would like to use intraday white. This is the one that I wanted. Here we are. In the last 30 minutes, so this candle will close in 6 minutes actually. So post the data, okay, we have seen gold gaining some ground, right? Because of the employment data, possibly the refunding announcement on treasury borrowing also might boost it, gold, because as I can see over here, the yields are a bit under pressure. But gold has found some ground after consolidating the whole day around the pivot point of the day. We've seen it jumping. This is a 30 minutes chart. Let me amend also my ticker. 30 minutes. Perfect. Excellent. So obviously we need another 5 minutes until this candle confirms this jump. But the fact that we have moving averages pointing higher, stochastic already posted a bullish cross, as you can see, and it points further to the upside. Can you see that? It points further to the upside, bullish cross. RSI is at 66 and pointing upwards. That suggests that there is further positive bias in this 30 minutes chart with next resistance level at the resistance day of the day, which is at 2047, or down to the 2045. Just zoom out a bit. I would really like to see bottom, high, bottom. The Fibonacci expansions is just for those that any of you that is in a 5 minutes chart or 15 minutes chart, and etc. So as you can see, the asset has already broken the previous high that we have seen, right? Extended higher. It didn't manage to have an 100% expansion, but look at this. This is a very, very short time frame, okay? 15 minutes chart. So moving averages, bullish recross, keep pointing to the upside. Stochastic the same. So next level resistance 2044, and the very next one is over here 2047 and 161 Fibonacci expansion 2048.20. So that's for anyone that is interested on scalping or very, very short time frames, and etc. So okay, however, have in mind that gold is it might continue ranging until the FOMC tonight, okay? Because there is the need of further clarity, as we said, and it had been actually very mixed the last 2 weeks, because there is the need of more clarity. There is the need to have a clarity from FOMC meeting tonight. It's a safe haven, so it finds some support due to the geopolitics in Middle East. But support from the geopolitics, uncertainty from FOMC, which is adding in a bit of a pressure, while all the dovish comments that we have seen from other central banks, such as ECB, Bank of England, and Davos, all the Davos comments that we got, is something that kept the gold a bit sideways overall. So I know that is your favorite asset, but the last, actually, since the last few days, it's in a ranging market. So let me just, let's have, as I said earlier in the daily chart, we need to see whether tonight gold will manage to extend above 2040, because this could open the doors further to the upside in the medium term. Intraday, however, as I mentioned, nice candle, bullish candle. Moving average are suggesting that there is further bullish momentum in the very, very short time frame. So yeah, let's wait and see. Some correction has already started, but stochastic are keep pointing higher. So still quite well supported. So let's move on. Guys, questions, things that you want me to cover. I want to know about HFM copy trade. Okay. We have announced some webinars every second Monday. So starting on this Monday, regarding HFM copy trading. So please, USA Yongyu, I don't know where you're placed in the world, where you're, which country you're a resident, but there is access. You can register in our webinars. Visit the webinar page on our website and hfm.com and register on those webinars. My colleague Francois will try to, he will present every second Monday a webinar precisely for HFM copy trading. We're going to try to provide some material in socials as well from my side as well. So yeah, it's a big product. It's not complicated, but in order to have a better understanding, it's better to register on the webinar, if for free anyway, in order to take it step by step with Francois. Okay. If you need right now something specific for HF copy, don't hesitate to let me know right now, okay? But if I cannot cover right now, I'm already 40 minutes live. People will get bored of me. I think they already get bored of me. So I cannot cover such a big topic as HFM copy trading. And also it would be very helpful for me to know whether you want to be a strategist or a follower, whether you are your experienced trader or not, whether you have never touched a platform in your life. So however, if you have a specific question, let me know and I will try to help. Just joining, don't worry about the Adedolu. Anyway, we have covered only dollar and gold, and the live stays on the channel, so you can drag and drop and it's to see what you have missed. What do you expect? Okay, guys, it's very tricky. So let's once again, let's summarize. Let me try to give you some a bit of light regarding the FOMC. Everything depends on FOMC tonight, on Mr. Powell. Okay? We're going to have the statement tonight and a press conference. Even though no policy change is expected tonight, however, as usual lately, press conference is the one that matters the most. So it's basically everything depends on that press conference. Everything depends on Mr. Powell and whether he's going to give us any hints regarding the rate path in 2024. The fact that they're going to proceed with interest rate cuts is quite certain. The key question is when. Because as I explained earlier, the data are stubbornly presenting that they're stubbornly presenting a quite solid and strong growth in the US economy, something that suggests that inflation might be held higher for longer. That's why I mentioned that the rally that we have seen in dollar in January is based on the data, on the strong data that has postponed, is pushing back the timing for the interest rate cuts. So that's why everything today depends on Mr. Powell and any hints regarding the when they will actually proceed with interest, or they will announce interest rate cuts. Initially, it was March. Now it has shifted to April. Not now, actually, 2 weeks ago, we shifted to April. Now, after the consumer confidence, it has shifted to May. And if the economic data continue to be strong, we might even see interest rate cut taking place at the very last quarter of the year. That's why tonight's press conference is crucial, because we're waiting closely. We will closely monitor Mr. Powell to get any hints. So if he sounded extremely dovish, okay, that could add further pressure on the dollar. If, however, he doesn't give a clarity, or if he mentioned something like, oh, we're gonna stay, we're gonna keep rates unchanged for longer, we don't expect to change anything anytime soon, this is a bit hawkish, okay? So that could support the dollar. So everything depends on that, on Mr. Powell, I'm afraid, whether he will reveal another, whether he will reveal any hints regarding the policy and when they will actually proceed with interest rate cuts. Now, what else I wanted to add? So if you are interested, my dear friend, regarding gold during FOMC, there is nothing really to advise you rather than keep an eye on the technicals. Scan your gold, find, I don't know what kind of time frame you're trading, or what kind of trader you are, but in regards to the gold ahead of the FOMC, we have seen to be supported a bit. So keep an eye on the levels that we mentioned earlier. So let me put the 1 hour chart on. So guys, this I put over here 3 resistance areas ahead of the FOMC: 20, 40, 43.50, and this area over here, 20.48. These are 2 key support resistance area. Key support levels are the, let me fix a bit this. I want a bit tighter. That's a much better one. So key support resistance levels, let's find immediate support levels. Immediate support levels are the 2036, which is the previous bottom, Okay, here we are. And the bottom of the range, 2032. Okay, so what that's supposed to mean? Intraday, ahead of FOMC, a push above 2043.50 could open the doors to the ceiling of the channel, and which coincides with the first resistance of the day, with my 161 Fibonacci levels, with yesterday's top as well. Okay, could indicate a breach of that area, while a breach of this level could open the doors to the 2057 level. Okay, use your pivots, or put a channel, or use your Fibonacci's. Okay, gold could get as high as 2050 and 2057 if and only if we see a break of yesterday's peak. On the flip side, if gold starts to correct, okay, and if it actually managed to break and to move back below the 2040 level, then 2040, let's put 2040 as well. 2040, remember, we need complete candles, right? 2040 is here. So if we see a closure within the next few hours below 2040, this could open the doors to 2036 and 2032. Let me just correct this. These are very tight short-term support and resistance levels, okay? For very short time frame traders. Okay, perfect. I've just solely rely on the highs and the lows of the last few days and on my channel. If you have a different setup, if you're using ATR for identifying targets and stop losses, if you're using fractals, fair enough. If you're using pivot points, fair enough. Up to you, okay? So what else? Who's next? Currently, dollar is low indeed from the data received so far. We do see a high chance for a cut at the Fed. Good question. Let's get back to dollar. Where is it? Yeah. Ooh. Guys, did you realize? Thank you for bringing up dollar again, Josh. It broke the 103.9 level that we initially saw when we started the live, and my Heiken Ashi continued to have no tail at the top, something that is bearish. This is a sign we have 3 consecutive Heiken Ashi candles with no tail at the top, something that indicates further pressure in the very short term. So the next support is the 102.890 and 102.70 level. So yeah. So currently, dollar is low. From the data received so far, we do see a high chance for rate cuts at the Fed. It's not a matter. It's not like we need, based on the dollar performance, we gonna anything will change on the Fed policy. No, but ahead of the FOMC, markets might try to sell the dollar ahead of the Fed. This might be possible. That's why it's good, guys, ahead of the FOMC to do your homework and find some trigger levels, some support levels, and in order to be prepared ahead of the Fed. Remember, if a support level is being triggered and broken, that could be used as an entry point. right? Get prepared. Yeah, that opens the door. That opens the door towards the that level that I mentioned earlier, the 102 90 to be precise, 88 to be precise, which was tested once, twice, three times, four times, and the further down 102.75, which was the latest swing low that we had. Yeah, if sell-off continues, we might see the asset breaching again the 102.50 level. Trade what you see, not what you think, especially ahead of such an important event such as the Fed, Josh. Okay, we don't know what Mr. Powell will try to do, whether he will be dovish or hawkish, because we, we know that the policy will not change tonight, but we don't know his speech, whether he deliberately will want to calm the market or whether he will open his uh, uh, papers and honestly state what they have in mind. So um, okay, so scalping gold. If you're a scalper, Beryl, why not? So referring to even a 5 minutes chart and etc. Heiken actually is quite useful on such a short time frames. And look at that. This is a 5 minute. Okay, guys. Let me just change the caption because I don't want to. 5 minutes. This is just for Beryl. Heiken actually is quite useful for scalpers and 5 minutes traders or something. So there are many strategies, but just the 5 minutes chart just to show you. Oh, sorry, this is not gold. Where is my gold? Gold. Okay, here's this gold 5 minutes chart for anyone that is interested on scalping. So is Beryl. How about scalping gold? There's nothing wrong about it as long as you are familiar with scalping strategy. Okay, it's not for everyone. Some people feel very stressful scalping. Up to you. Nothing wrong with scalping the gold. I can see that we have some bullish indication, further bullish indication for gold in the 5 minutes chart. See that? It's not only, it's crystal clear. Actually, the Kaiken Asher candles, they don't have any tail on the bottom, something that indicates that there are still some bulls trying to push gold higher. So as long as you don't have an indication for a pause of this rally or a pullback, so yeah, why not scalping gold? Up to you guys. Just make sure that you feel confident about scalping. It's not for everyone. Okay, it's not for everyone. Any strategy is not for everyone. Whatever you want to do, try to make sure that it reflects your personality, it doesn't get you stressed and anxious. Okay, whatever you do. If you have a particular question by Betty, let me know about scalping in gold. So so yeah, over here, so scalping. Okay, we had a nice decisive break of this latest resistance now has been turned into a support. This is a 5-minute chart, extended higher, keep moving higher. So it seems that there is further steam, at least for the 5-minute chart. There's no indication of a reversal. But that's 5-minute chart. Okay, that's a very tight time frame. New Zealand cat, of course. I don't know which time frame you want me to cover, but let's start with the daily. Okay, as usual. Let's start with the daily New Zealand cat for Jamal. So, perfect. Jamal, New Zealand cat. I can see a lot of indecision in the daily time frame, ranging for 8 days in a row after the dip that we have seen in the beginning of the year. Let me change the template though. Nice. Okay. Okay. What we have here? What do we have here? Would like to check the exponential one. With the exponential, yes. And if you allow me, where is it? Where is it? It was that one. Sorry. I would like also to check the 100. To put on the 100. Okay, now I have 100 exponential and 50 exponential day moving average. So the asset, Jamal, New Zealand cat, as you can see, overall is in a negative outlook. Why is that? Momentum is negative and it keeps rising to the downside. We had a sharp correction to the downside in the beginning of the year. It remains below 50 and 100 day moving average. Okay, so overall we could say that is neutral to negative. So in the overall, you should keep an eye on the 180, which is the floor that we have seen in January, and on the 2 moving averages. Okay, so currently is ranging. However, look at this. The asset is halfway the up leg that we have seen since September. So in the medium term, a move below 81.80 could open the doors to 2023's bottom. Okay, while a move higher and more precisely extending above its 100-day moving averages, or even better above its 50-day moving average, could indicate that the asset will return to the highs that we have seen last year. Now, that was in a daily chart. Okay, let's zoom in intraday to see what's going on. Let's start with the daily chart, with the 4-hour chart, sorry. So we had a nice strong down leg. Try to recover some losses. It breached the 50%, but extended and I get down, retesting for a second time the bottom. And it's like steady. It's neutral. It's neutral. I'm gonna check the intraday analysis. What do we have over here? Let me This is an intraday setup. Let me just change white. Okay, perfect. Save. So Jamal, nice. Okay, I guess this is what you want me to cover, the 1 hour chart and the 30 minutes chart. Yes, and nice. This it has been to the upside since this morning. Moving average are keep pointing higher. Pivot point, it extended above pivot point. Stochastic still pointing further to the upside. RSI the same. So yeah, intraday there is the asset is in a rally. If it managed to break the first resistance of the day, we might see it extending further to the upside and to 8250 territory. So there is some decisive rally over here. So okay, so here we are. So next levels, resistance levels, intraday are on the 8240. Yeah, here we are. Yeah, there is a nice momentum, bullish momentum intraday for dollar cat. Well spotted. And interestingly, it broken also. It posted. It looks like an inverse head and shoulder. Look at that. It looks like an inverse head and shoulder, which is the neckline has broken. Come on. Look, inverse head and shoulder. Neckline was here. It broken. So we are waiting to see the next 40 minutes whether this candle will hold gains, because if it hold gains, that will mean that we have a very strong bullish pattern, indicating that the asset could extend further to the upside. So the very next levels of the day, if we see yesterday's peak being broken, which also coincides with the very first resistance of the day, and will also confirm the inverse head and shoulder, then that will mean a potential retest of 8250 or even 8270 territory. Guys, running out of steam. We are here for more than an hour. Okay, cable. It's my cable. Here it is. Intraday. What? Here we are. Perfect. Okay, we haven't discussed about Bank of England. Bank of England, similar with the FOMC and the ECB, they don't expect to change that policy. Okay, however, they will have a press conference and a voting as well tomorrow. And we have seen from UK actually weaker growth. The economy is slowing down. Okay, there is a weaker growth from UK, weaker than what the bank had in mind. So that indicated that inflation might correct further to the downside. Actually, it did correct it further to the downside, something that it was much weaker than anticipated. So this is there is a very strong case in favor of taking out the tightening bias and moving in a neutral stance. So that's that. If we got this confirmation tomorrow by Mr. Bailey, this could add pressure on the pound. However, tonight is FOMC as well, and cable is basically UK against US. It's basically Bank of England against FOMC. Okay, so that's why if we have a really dovish Powell tonight, then we could see cable to the upside. Okay, yeah, everything will get clearer, but I want you to keep an eye. There is not a descending, actually there is a nice triangle over here. Okay, there is a nice triangle over here with cable. So try to monitor. Actually, let me be more. Here we are. Bottom, triple tested. There's a nice triangle in cable. It's moving within a triangle. So keep an eye regarding a breakout and a move outside this triangle, because this will so for example, a break and a move outside to the upside of the triangle could open the doors to the December's highs and could suggest a resumption of the rally that we have seen since October, while a move and a break below outside on the downside of the triangle could open the doors to 125 level easily, if of course there is a decisive bearish candle outside the triangle based on a pretty based on a possible hawkish Powell. That would be a bit surprising, but still a possible scenario. So intraday, my dear friend, nice boost on the dollar weakness. Next resistance remains the 127.30 level, while a move ahead, if it breaks that level, then we could see the asset retesting the top of the triangle, which is up to 127.55 level. Okay, 127.55 if this move continues. Actually, there is a nice bullish momentum in intraday for cable. Look at that. Bullish cross of moving averages. They keep pointing higher. RSI still pointing higher. Nice. Very nice. Keep pointing higher, above 50. Actually above 60. Keep rising. Stochastic still pointing higher. So there is further room to the upside in the very, very short term for cable, with next resistance at 127.32 and 127.55, while on the flip side support could be seen, here we are, come on, at 126.96. You see, is the bottom of our candle. It's also our 9 exponential moving average, but also the previous peak. So this is a nice immediate support level for cable. Guys, I'm gonna call it a day. James, don't worry about it. I have covered gold several times during the live. As soon as I close the session, you can drag and drop your cursor and find the gold analysis. I have analyzed gold several times in this session. So I'm gonna call it a day right now, and you can drag and drop and find the gold analysis. Guys, thank you very, very much for attending. Be very careful ahead of Mr. Powell's statement today. We might face a significant volatility in the market. So all the attention is on the FOMC. And tomorrow is a Super Thursday with Bank of England taking place, and Friday is NFP. So these 3 days, the last 3 days of the week, they might be the most important of the whole month. Okay, be careful. Always trade with an appropriate and adequate risk management before taking any decision. Be up to date with the news, and take care. Enjoy the rest of the day. Any feedback is more than welcome. Anything you need, we are always here to help. So yeah, that's pretty much it. See you again on Friday with NFP Live, presented by my colleague Michalis. Enjoy. Bye-bye.